John here back again. It's been a while since I did a video, and today my main focus is to push this idea of subjectivity versus objectivity. And as you all know, that there are a lot of strategies out there, but at the end of the day, only two things for me, have remained constant: the aspect of time and price. Those two things do not change. Price patterns do change. What else changes? The use of indicators. They are too shifty, and most of the time they are late. They're not. I don't think those are tools. If you don't know how they are used, I don't think it's something that you should start off with as you begin your journey as a trader. As a beginner trader, for me, the best thing that you can be taught is price and time and how the two affect each other. Every other thing is built around them. You, in the markets, these are the only two things that for me have really made sense. People forecast based on price. We are anticipating the dollar to get to 102. We are anticipating the dollar to get to 101. Why? Because at a particular point in time, we are expecting news to come out. Maybe you have the FOMC, you have the NFP, and things like that. But I have never had people make forecasts based on the indicator. Because the MACD has crossed this and this, we expect the dollar to get to 102. It doesn't cross. Does that mean the dollar will not reach for that target anyways if other fundamentals that are based on time could push for that target? For me, I guess at the end of the day, it's important that we as traders, and this is especially for the beginner traders. I'm also a beginner trader, but through the struggles that I've gone through, I've been able to learn one or two things that for me have remained true time as I've kept on learning. And this is what I did. Yes, I have a solid strategy, I have a solid approach based on price action only. I don't use chart patterns, I don't use candlestick patterns, but I have an approach that gives me risk to reward trades and high probability entries. But at every other juncture, I've always felt like, yes, I can. I have gotten a setup at a particular level, but how does that level hold up? What else is at that level that will give me that confidence that this can offer a proper support or this can form a proper resistance going ahead? So after getting that thought in my head, I had to backtrack everything that I've been doing. I revisited everything that I've done, and I made a point to ensure that whatever I'm going to do going forward should be very objective. I don't want to be caught up whereby I'm trading an approach and I'm questioning every signal it's giving me. And that doubt, that little speck of doubt, will cause the hesitations, it will cause the, the lack of belief in your system. It, and the hesitation will do two things. If you pull the trigger, you'll want to pull out just as fast. You'll start breaking your rules. And once you start going down that road, getting back up, getting back on the saddle and trying to work your way to where you are, it will take a lot of time. And it will even shake your confidence wise. And that is what I've gone through. And I took it to myself to to break down everything that I'm doing and see what is that one thing that has stood time and again when my strategy was right and when my strategy gave me off signals. So this is what I decided to do. I watched my charts consistently for no, this will be as from December to the end of to last Friday. The only thing that I was doing was watching price and noting every little thing that stood out for me. And it's amazing how complicated I had made my approach, yet it was supposed to be so easy. And the idea be the things that I've come to realize is if something is giving your strategy a basis, a confluence, then it's more important to focus on that rather than should obviously be subjective to you, and you'll feel that need to protect it. You'll feel that need to identify with it. And for me, I I agree that objectivity is like a two-step approach. You first identify what gives your strategy confluence time and again. And then after you realize what that is, psychological bit of it comes to play. Now it's you, it's your ego against the objectivity that is brought about in the markets. If you can't hack the second part, which is the psychological part, you'll continue performing at a mediocre level compared to when you approach your strategy based on objective terms. And the past week, even with all the volatility and the news, using price and time only, and a filter which is time based. Uh, every day I saw setups every single day, and I wouldn't take them because it was so tough to get it through my head that my strategy couldn't have missed these setups. In the real sense, I was forgetting that the second part of objectivity is your psychology, your psychological standing. And I missed a lot of setups and it sucked. Every single time it sucked. And I promised myself that since I have decided to be objective, The only thing that I can do is to be subjective, is to be submissive to the market and its objectivity. It will give me a signal that I may feel uneasy about, but those are my emotions, those are my subjective tendencies. They have nothing to do with the market. So what should I do? I should just eat my humble pie, take the setup, and let the market dictate what it wants me to do, and nothing else. And just accepting and visualizing that, taking what the market gives me at its own opportune time, has relieved tons of pressure off my back. I'm now not thinking on the basis of am I right or wrong. I'm thinking on the basis of this is what the market has given me on an objective standpoint. So identify is probabilities. Are the probabilities placed in such a way they give my approach an edge? And if so, why am I hesitating? Pull the trigger, ask questions later. You have a setup, you have a confirmation. Don't think about it. Telling you I am here. You waited, and this is me offering myself to you. What will you do? Will you get back to that situation? Will you get back to that cocoon of is the market really telling me, is the market really conveying to me the right information? And that's it. That's how you hesitate. But if you get used to agreeing that this is objective, okay, I am submissive. I am the market's bitch, if I may say so. Let me tell you, the people who've made it in this market, they don't impose their ideas to the market. They take what the market is giving them and they run with it. They kiss the market's ass over and over again. And that is how they've maintained their success levels by allowing to be submissive to the market. And before that sunk into my head, I have pulled myself through some thick mud over and over again. And I promise myself that I will not do that again. I will take the setups that the market is giving me. I will kiss its ass. If it tells me to jump, I ask how high. If it tells me to run, how far. I will follow it like the disciples followed Jesus. And I know as my career progresses, I will hit those levels of success that I anticipate to hit, go further beyond what I imagine myself going to. And furthermore, as I think that I was trying to be bigger than the market, it makes me laugh at myself, since that is the most stupid thing that I have ever done, and I will not repeat it. And let's go to the charts and see. I've drawn these levels, the round numbers and the mid figure numbers. And as you can see in between, you'll realize other figures, the 20s and 80s, the tens, the 20s, 30s, 40s, 50s, 60s, 70s, and 80s. But I found that the round numbers, the mid figures, the 50s, the 80s and the 20s have this pull to them, and they offer very nice signals. Now, this is what I was saying. If you have a round figure like this one, now you can come and push all your subjectivity in the markets as much as you want. You can pull your chart patterns and what have you. Now you can come with your chart patterns and you won't miss an entry here. So how you manage your risk at these points. Now this is what from collecting data and doing numerous backtests. These levels are important. And the one way that you can prove that a level is important is the amount of volume, the amount of volume that is used to break through these levels. So just imagine the amount of volume that was used to break through this level. Price moved in a lackluster way in between here. But when it gets to this level, you see a spike in volume. You see, we had a lot of volume coming in, but the level held, and you see, price blows away in the opposite direction. Massive volume kicks in around these levels. And the thing is, to me, these levels don't change. These levels remain the same time and time again. And that is why I feel confident. I feel very confident using taking signals that emanate from these price levels. If I'm, I'm more I'm more conscious of taking signals around these levels. If someone tells me that he's looking for an entry at 102, 177, I'll be a little iffy. I won't be as confident getting into it. But if you tell me you have a signal at 102, I'm conscious. I'm more conscious. And that is why, of late, it's been very easy to pull 50 pips from each target, from each entry I'm taking, since I have a predefined exit and I have a predefined entry point, given price will behave in a certain manner when it hits these levels. Which is better, anticipating or reacting? I am anticipating when this level is broken and it finds support somewhere around here or here. As it trade backs to that big figure, I'm anticipating a certain price formation. Now that's where your Fibonacci's will come to place. Your Elliott wave counts will come to place. Your indicators will be late, but they'll come to play. Uh, what else? We have tons of stuff that you'll note when everyone comes with their own idea of how price should, if, what sort of signals will come around this place. We have tons of signals coming to play here, tons and tons of signals. So don't let your subjectivity towards something that will cause you pain in the market. Have pretty solid entries, and as you can see, I have only 10s, 20s, 30s, round numbers, but the best ones that I use are the big figures and the mid figures. They haven't failed me yet, and I'm not expecting them to fail. Since they are objective, the only way I can fail is if I try to be too stingy and I put too tight a stop loss, or I try to be smarter than the market. I try to outplay the one thing that has always been neutral. So this is the DXY chart. We saw a break below 102, a retest earlier on, and then NFP just smashed below 101.50. So a play back to this level here, and it holds. We see a break. We see these lower lows, lower highs forming, and lower lows being the lows being taken out. I'll be very keen to take such an entry, since ready to me right now. We've seen a break below, a very on 150, a retest to this level. I'll be keen to look for setups for shorts. I'm not saying that I will not take long setups. If we see a break above this again and a retest, I'll play longs. A test, a break, and then a break lower. I'm taking shots. The good thing about these levels don't change. And if you know the characteristics behind how to look for a long setup and a short setup around these levels, it becomes very easy for you to create plays in the market in an anticipatory mood. Instead of reacting towards information, you can anticipate, absorb all the information calmly, and then pull the trigger when the time comes. So the other thing that gave me confidence about the dollar breaking, this was very key for me. This is the 10-year yield, and as you know, the yields follow the yields. Price follows yields, and once I saw this break, uh, I, I don't know if the the last video I made, price was here, and the yields trickled through this level. But once it broke and it retested the support level formed here at 2.51, we saw a massive move above 50, a lot of volume, and then a retest. It held, boom, we go again. Now from here, every retrace, every pullback, I buy. And then once we broke through 2.6, see, this sort of price action is indicative of exhaustion, and a reversal. You had dodges, hammers, indecision candles plus exhaustion candles. And then you see a lot of balance. We have buyers and sellers coming to play, but we don't have a clear direction. And then we had NFP. Even it was before NFP, it started dropping us from Thursday, and then we had a Thursday drop, and then we came to Friday. NFP, it smashed, it retested after breaking big volume at 2.6, a retest, and then we have this. So for me, the dollar is really playing that game. It's bearish as for me this far. Nothing has changed. We've smashed through a massive resistance level, a ceiling. We retested and we rejected. So this gives me a clear indication of what to expect next week. It's totally no pressure. The this type of trading to me is 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 a no pressure type of trading. I don't have to do a lot of reviewing. I just have to look at my charts. I just have to look at the levels, the massive levels that have been broken, and how have they been broken. If they've not been broken with a lot of pressure, a lot of volume, I'll be very keen to take entries because I know that might be a fake out. They might be trapping buyers or sellers depending on which level is being broken, and that is why I'm very keen. That is why I expect something like this. Once we've broken a level, I don't want to see this sort of price action at retest. I want to see massive moves like what happened here. It broke, it hung around here. That is why I wasn't sure if you're going long or short. But since you've broken a major level, a resistance level, I was anticipating the pullback that will happen to retest the support level. I wanted to see massive volume. And then when we had this 1 hour candle break through this high, the next open of the candle gave me a clear view, a clear idea of what will happen. So we saw that kick in volume moving higher, price moving higher, and then we had a stall at 2.62. And in the 4 hour chart, as you will see, that level on the daily chart is a clear level of price has always come back to this level 2.62, and it stalls and it turns, stalls, turns, stalls, turns, and 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 that gave me like confidence to know that there, if we see strong a strong bearish move from the dollar, it's something that I would anticipate. And you see, this type of price action is very good. And now this is where you bring your chart, your candlestick patterns, your chart patterns to play, your trend lines. This is where they really come to play. And you should just confluence them with a level that is more objective, that has a lot of psychological, what will I call it? A psychological influence on price, and be sure that that psychological influence on price is not shared with the retail, mostly the retail traders more, but more on by the institutional traders, because these are level that institutional traders really like using to base their trades on. Uh, for me, right now, this is all I wanted to share my view. what I'm expecting coming next week. I'm expecting to see, since I'm seeing this is a proper level of support, we could see a retest of 2.6. And if it holds at 2.6, I guess lower prices on dollar will be likely going forward. I'm not, and this is a play I'm just anticipating. If prices continue dropping lower, uh, I am still ready. I know what I'm supposed to do. The same thing, we have a lot of confluence. We have the 10-year yields there, and then we have the dollar here. It broke through two major levels. This was Thursday, it broke through 102. And then Friday, due to NFP, broke through 150. That gives me a lot of. And then we have a break in structure here. It took out lows. And then if we see a retest of 105 and it holds, I'm sure the dollar will have a little bit of down days before we find support to go higher if it wants to go higher. But as a day trader, I play price a day at a time. I don't push my views too far. I think trying to forecast price is like trying to forecast weather. That's my opinion. If it's sunny, carry an umbrella. If it if it's raining, carry an umbrella and wear warmly. If it's sunny, wear something light. Carry an umbrella if you want to protect yourself. Use some sunscreen, something of that sort. That's how I approach my trading. I view price like that on a daily basis. If you have weakness, why are you buying? Short the market. If you are strong, why are you selling on every pullback? Buy on those pullbacks. Buy strength, sell weakness. It's like black and white. And other complications of that people add to trading, to me, it doesn't make sense. It's easier. It's like telling a child, come here on the fire, and then the child asks you why. This is what we do every day in the markets. The market is telling us, don't buy, I am weak. You ask it why, by buying, and then you get burnt, your stop gets hit, and then price just continues dropping. You feel like the market is out there to get you. The market even doesn't know you exist. The market is so neutral. It is your best friend if you just do what it tells you. Day trading, I don't like swing trading. I know if I make proper decisions now, I'm able to know if I'm very right or very wrong. Some people consider it tedious, but I consider it a good challenge to grow as a trader. I guess you need that day trading view to keep you sharp, to keep you aware, to improve your awareness. Because if you're able to make those decisions very fast, even as you move to higher time frames, if you go back to the lower time frames, if something has changed, you'll be able to pick it out very fast. You'll be able to take new enter if it gives you more positions going ahead and things like that. For the one viewer, thanks. As I said, I do these videos for my recap so that when I rewatch them, I can really internalize what I'm learning and the things that I'm picking along the way. I cannot be able to remember everything, but on the videos I can be able to rewatch and see what I need to do differently and things like that. And if any of these videos do help you, uh, you can comment, you can ask me questions on my channel. You can comment below and I'll get back to you and we can go from there. Thanks. Have a nice weekend.